Mortgage rates are approaching 5%, adding to the struggles in the housing market. So we wanted to get a little help. And joining us is realtor Burr to share how it impacts both sides of the home buying equation. Good morning.
Good morning.
I want to start first with those who are looking to buy the home. What's the biggest impact here?
So the higher interest rates are definitely having an impact, but it hasn't shown itself fully in the marketplace. Buyers are having to chase higher prices with higher interest rates and low inventory. But so far, what we're seeing is that we're still getting multiple offers with sale prices going high above the list prices for the most part, and properties selling typically within the first week or two.
It sounds like you just said a great case for the seller there. For the buyer, maybe not so much. Higher interest rates and lower inventory doesn't sound like a great thing.
It's still tough for buyers. In fact, the cost of home ownership for new buyers last year increased about 30% when you account for the higher prices and the higher cost of money. For sellers, this kind of market comes around only about once or twice every 16 years. So it's imperative that if they're thinking of selling, they take advantage of this. I know a lot of them say, well, where am I going to go? But I can tell you they're going to find a great place that's going to be right size for them.
For the buyers, what do you see happening now in the near future? If you say it really hasn't caught up yet as far as the interest rates, how long is that in realtor terms? Is that a period of weeks, months, or years?
So the best example we have to go off of is the last cycle, and that is from 2003 to 2007, the Federal Reserve increased interest rates by 4 percentage points. Thus far in this year, they've only increased it 0.25%. So we've got a long way to go before, in the last cycle, they broke the back of real estate in 2008. I imagine we're going to have a strong seller's market for at least the next 18 to 24 months. After that, the cumulative effect of higher cost of money might have a sense of slowing things down.
Now, given that some people obviously are going to buy the house when they can buy the house, everybody's needs are different. If you're trying to play the numbers game, and right now your choice is, do I lock in now at a lower interest rate than what we might see a year from now, but perhaps have to bid more for the house, or do I wait, maybe pay a higher interest rate, but maybe I can get a better deal on the house? Where do you find that balance evening out?
So I think that that's probably going to even out under both of your scenarios. The main thing for a buyer to remember is that they need to commit to home ownership for about 4 to 5 years, so that if there is a short-term hit on prices, they can ride it out while still enjoying the benefits of tax write-offs in the interim.
In the meantime, if you have the opportunity to lock in now, do you do it?
Most definitely. The rates on the 30-year fix, depending on the mortgage amount, are from the low 4s to the low 5s. They're also very attractive 10-1 ARMs or 5-5 ARMs. And these are mortgages that have a set interest rate for a certain number of years, and then they'll reset. My hunch is that home buyers are going to have a chance, even if they take an adjustable rate mortgage, they're going to have a chance to refinance into a 30-year mortgage at some point during the initial term of those adjustable rate mortgage loans.
All right, lots to keep in mind. I appreciate your time this morning. That is realtor Burr joining us to talk about the impacts of the interest rate hikes. Thanks, Corey. Appreciate it.